Hey, what's up, everybody? It is Thursday, January 13th. Got the cowboy hat going, yeah! Woo! All right, time for some question and answer. Somebody asked a question, a good question. Why does the government sell treasuries if it has a monopoly on money creation? Very good question. All right, let me answer it for you. So it's true. The U.S. government is the monopoly issuer of the U.S. dollar. It can create dollars by decree, basically. You know, Congress comes together and says, hey, we want to spend $740 billion for defense. Boom, it's done, 740. It instructs the Fed to make payments from its account. So why then does the Treasury sell debt securities? That's a good question. And the answer to that is the sale of securities is a reserve maintenance operation. Let me explain. If the government were to spend and spend and spend, as it does, to make payments every month for things like Social Security and defense and Medicare and Medicaid and all the different things that it spends on, reserves would pile up in the banking system, and what would happen as a result of that, banks, in their activity to lend overnight reserves, there'd be so much reserves in the banking system, the overnight interest rate, which is the Fed's policy rate, would fall towards zero. So the Fed would in effect lose control of its policy rate. So what happens is the government sells treasuries to absorb some of those reserves, to take out some of those reserves. And that sustains the policy rate where the Fed wants it. Now, somebody astute might say, well, Mike, the Fed pays interest on reserves. That has been the case since 2008. So why would reserve balances fall? I mean, why would the Fed's policy rate fall below that interest rate? In theory, it would not. But again, you would have a situation where there would be so many reserves in the banking system. Some banks don't have access, or some institutions don't have access to the Fed directly. You would see the overnight rate again trend towards zero. So the sale of treasuries is a reserve maintenance operation. It is not borrowing, okay, because the government spends first and then sells treasuries after that. And if you think about it, you know, at first you might say, well, that doesn't make any sense. It has to borrow. We hear all this stuff about the Fed having to sell bonds to borrow. Think about it. The only way to pay for a treasury is with dollars. All right, you can't pay for a treasury with yen. You can't pay for a treasury with euro. You can't pay for a treasury with British pound. You can't pay for a treasury with gold. The dollars have to be in the system to be able to purchase treasuries. So government spending itself creates the dollars which are used to purchase treasuries. So it has to go in that order. When you think which comes first, the chicken or the egg, in this case, the spending comes first, the sale of treasuries comes second. And again, the sale of treasuries is just a reserve drain. It is intended to keep the level of reserves in the banking system at a level that is consistent with maintaining the Fed's overnight interest rate. That's all it is. The Fed the Treasury really doesn't have to sell anything more than short-term T-bills. I mean, all the other debt instruments or debt securities that the Treasury sells, 2-year, 5-year, 10-year, 30-year, it's really unnecessary because they all do the same function. It's just a reserve drain. And so really the only thing the only thing the Treasury needs to sell is short-term T-bills, and that would, that would do exactly what they needed to do. But again, this is, it's complicated by people who think it's borrowing. I see almost on a daily basis, economists saying, the government should take advantage of low rates and sell a 100-year bond or something like that. I mean, it's totally ridiculous and it's unnecessary because, again, the sale of all debt securities, regardless of the maturity and the duration, is just a reserve drain. So you only need one type of security to sell, and the easiest thing would be T-bills, short-term T-bills. So that's it. Anyway, let me talk a little bit about Biden tonight is going to talk about his economic plan. So I'm going to have to listen to that and see what is being proposed. The number out there is something in the trillions, something between 1 to 2 trillion. I think he's aiming for a number on the high side. So we're going to see, and of course that's got to go through Congress. It's got to get passed probably through a process of reconciliation. So we don't know what the final bill is going to look like, or the final legislation is going to look like. But it looks like another big stimulus will come in sometime in the first quarter. It's going to be very bullish. It's going to continue these trends. The inflation impulse trends down on the dollar, up in gold and commodities, up in stocks with a outperformance in sectors like materials. And down in treasuries. So anyway, I'll keep you posted on that. I hope that answers the question. Keep your questions coming in the comments below. See everybody tomorrow. Bye-bye.